in the short term.
We welcome you with the news that the Nifty hits a record high.
There could be a very large deal, an interesting deal brewing as far as JSW Energy is concerned.
Dream folks will see nearly 70% of its outstanding equity become eligible for trade once its lock-in period ends on the 4th of March.
Currently, South Central Mumbai and select western suburbs see nation-high property prices of around 30,000 to 100,000 rupees per square feet.
For the market, we've moved even higher, so it's a full 1% gain that you're seeing on the Nifty.
Well, that was the day so far, and if you want to see the definition of a full house, I mean, I think you just have to look here, right?
Here we are, all four of us.
Absolutely.
And the market's at a record high.
Market's at a record high. So we're in full form, full force to report on, what's happening out there with markets at all-time highs. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel, Reema, Surabhi. Guys, hi.
Hi, good afternoon.
Day four for the record books, right? I mean, and finally that range breaking on the way up and doing so decisively.
As they would say in cricket, right? Both the openers have come to the party today. You had one that was in top form, that's Reema's IT index. And towards the second half, you're seeing that even the banking names are coming back. So it's always good when both the openers are in good form. Otherwise, for majority of this week, Nifty Bank was taking a little bit of a leg.
You're missing one heavy hitter, Reliance.
Reliance Industries.
Yeah.
No, Reliance Industries has been doing well as well. So you put all of them together. That's Reliance, the Nifty Bank, banking names, as well as tech. You have 63% of the Nifty that's been in fine form. So Sehwag, Ganguly, as well as
Still in the 90s.
Tendulkar. Yeah.
90s and 2000s.
By the way, Surabhi's taken my suggestion seriously. I see the stand under the laptop.
Absolutely, it's an ergonomic way of ensuring that bone health.
I'm going to borrow that and get myself one.
Absolutely.
So that looks good. Anyway, I mean, we got the market, which is doing absolutely fine, as we described in cricket parlance. You've got everything going for it. So, for the last 3 days, it was Reliance single-handedly pulling, and today it is IT. Of course, I mean, now we will debate actually with experts, etc. How much of this IT rally should one sort of believe, get behind, and sort of get into? But the point is, the index itself is up some 3.5–4% or so. The question so far had always been banks, right? Will banks perform, not perform? Well, it did not really go all the way, the Nifty Bank. And now you got this other large part of the market, the underperforming Nifty IT index, which is really doing extremely well. So to the point person here, right, Reema? IT.
And it's a 5% gain now on the Nifty IT index.
Yeah.
So it's firing on all cylinders. Infosys is up 7.9%. You've got a gain of on TCS 4%, and everyone's joined in this party. LTI Mindtree, also a large cap now, that's up close to about 4–4.5%. First Source, which is a very large UK and BFSI exposure, that's the one which is topping the charts with a 10% up move. It's just throw a dart and you're going to get a big green on IT now.
Oh, absolutely. And, for a change, the midcaps are underperforming the large caps slightly because it is a big boys party. Midcaps are not bad. I mean, you're finding plenty of movers and shakers. I mean, I'll point out some of these PSU stocks once again today. IRFC, for instance, on the railway side. And you've got, Bank of India, ONGC from the largest space, UCO Bank, PNB. Largely speaking, PSUs are having another good run. So let's kick it off then and bring in the experts, starting with the technicals. We have Sandeep Agarwal joining in from Swolio Investment Managers. And actually, we'll talk about the
tech space, I think, in just a bit, Surabhi. Yeah. For the time being, I think let's get in Mitesh. Mitesh, good afternoon. It's been a very, very good Friday today. The markets have looked up and we're building onto those gains. At around this 21,900, what would you be tempted to do? Do you believe now we're broken out of the range? Or do you believe that you like to take some money off the table, have a good Friday evening, have a good weekend, take a chill pill, and come back on Monday?
Good afternoon, Nigel. In fact, it's a new high and it's come after a few days of consolidation. Typically, it should see follow through. So I would not be in a hurry to take profits. The other important observation is that the Bank Nifty, which has been underperforming, is on the verge of firing, on the hourly and the 2 hourly chart signals of uptrend. So if it can sustain above 47,600 for the next couple of hours, which is we have the closing today and then maybe early morning on Monday, then I think we can see the Bank Nifty head towards 48,300 levels, and in a good case scenario, even 48,600. So very positive overall. This scenario doesn't look like wherein traders should rush in to take profits. In fact, stay put and just trail your stop losses. And on the stock side, also trading with long bias. So I have a buy on State Bank of India with the stop at 626. Look for targets of 650, 655 to begin with. Disclaimer: it's a recommendation for our clients, so there's vested interest. And Grasim is the other one, which is also given some kind of a reversal. So that's a buy with a stop at 2090 for targets of 2165.
Okay, thank you very much for that. You know, on the subject of IT, there was this interesting note that I was reading from Nuvama, which basically said that this period of, January 2024 is very similar to what we had in Jan of 2022, only the polar opposite. So Jan 22 was, the start of the IT stocks declining. Interest rates were at its, at the lowest, and they started increasing from here on. So, the macro situation was the exact opposite. This is Jan of 2022. What happened was that first the IT stocks corrected about 30-35%, but the EPS estimates the EPS downgrades only took place much later, and it took place for 2 years later, FY24. So now what Nuvama is asking is that will the reverse take place? We're in Jan of 2024, where we've got the interest rates at its highest level. They will start declining from here on. So will the stocks rally first, and then the EPS upgrades will follow maybe 6, 9, 12 months down the line. But purely in terms of the numbers, what we've seen is a stable quarter, not as bad as what the street was fearing, given the demand constraints, the higher furloughs, the weakness in the discretionary spending. TCS has reported a growth on the top line. Infy contraction in top line at 1%. Was better than estimates. Both the companies reported a pretty good margin performance. For TCS, it was actually a margin beat and a second quarter of margin expansion. The TCS management is sounding positive. They're probably talking about BFS bottoming out, if not in Q4, but maybe at least in Q1. In fact, the management is saying that Q4 BFS revenue growth could be higher compared to Q3. So they're looking at a quarter-on-quarter revenue growth. So all this is adding on to the excitement, and plus in terms of the IT performance, it's the mid-cap IT stocks which have done better. The large caps have taken a bit of a backseat. So maybe you are seeing that catch up. In the last 12 months, the Nifty IT index is up 26%, whereas TCS Infy have rallied 16 and 17% respectively. Sandeep Agarwal of Sovilo Investment Managers is now with us on the show. Sandeep, how do you expect IT to play out from here on? It's not that we've got big EPS upgrades, but the stocks have gotten re-rated already.
So, Rima, we have to see 2-3 perspectives on this. And first of all, if you see the NASDAQ and the S&P and Dow Jones, despite, still people speculating whether it will be a hard landing or soft landing of the US economy, they are making new highs, right? And now if you put that situation that, Indian IT stocks got beaten down because there was a fear that those markets will suffer. And if those markets are going to suffer because they are the client market, eventually we will also suffer. But if those markets are recovering so sharply, so there is no reason for this Indian IT index to be, not going up, because finally the impact comes from that market. So that is one perspective. Secondly, as you rightly mentioned, one of the reports, I think, that view is very correct. Last year in January, when, January 22, everything started falling. When the news of interest rates going to be increased and all these attrition issues were there. And now when the reverse of it is looking like, then obviously these stocks will recover. Now, as far as EPS upgrade question is concerned, I think EPS upgrade always, trails. It will come with a lag effect. In my view, there will be the revenue growth doesn't impact the large names in a big way because everyone has some decent expectation for FY26. But the big impact will be on the margin front, because I think margins this year has been very low and primarily impacted by attrition. So now when, attrition starts pulling off and growth comes back, you will see a big jump in the margins, and that will lead to, substantial EPS upgrade. But that will happen in probably Q4 a little bit, and then Q1 and Q2. And that is what market is discounting now, because market is always ahead of time. And so that is what is getting discounted in the current rally.
But Sandeep, hi, good afternoon. Having said that, let me just ask you, given what you have heard from TCS and Infosys so far, when you start talking FY25, what is the kind of top-line growth that you think you can already start extrapolating, looking at the commentary, the companies, the management's body language, etc.?
So I think, next year will be a year where, we will get back 8 to 10% revenue growth, which is generally long-term revenue growth for the large names. FY24 was obviously an exception because clients were postponing in fear of recession and they were waiting for client signals. So,
Oopsie. Oopsie. Okay, all right. I think we'll try to get Sandeep back on, onto the show. By the way, the markets actually have moved up. Will we see 22,000 today? I don't know. A few of these stocks are just flying away. Titans moved to the high point of the day. I think we should get Titans intraday chart up for you on the screen. Tech Mahindra was as is up. It's moved a little bit higher. But L&T, we need to pull up a few heavyweights out there. L&T is a stock that's moved up. Titan as well has done pretty well. I think we had HDFC Life's numbers, if I saw it correctly on the screen. I think that stock, in fact, had moved up a little bit. And SBI Life as well has moved up. But I believe Sandeep is back with us. Yeah, Sandeep's back with us. Sandeep, you were making that point on tech, so you could complete that. And I just had a question for you. Is large cap tech is doing well, but mid cap tech as well is moved well. And over the last few years, you've seen when tech gets into a sweet spot, maybe sometimes the bigger money is made in the mid and the small cap tech. Your view?
No, absolutely. So the point I was trying to make is that FY24 was an exception year where, due to fear of recession and clients postponement, we have seen very muted growth for the large caps from 0 to 4%. And one or two large caps have even seen revenue decline. But FY25 will be substantially better compared to that. I think even large names like TCS, HCL should be 10-12% growth, and even Infy should be around 8 to 10%. So I think, this is a year of recovery. And remember, this recovery will come with substantial improvement in margin with falling attrition. So that will mean, again, some kind of EPS, better EPS growth, number one. And also those EPS will further see upgrade. So I think, that is what market is now clearly seeing, because once the downgrades stop or once the, the estimate cuts stop, that is the time for the turnaround. And I think this has already started in month of August. Since then, the IT index has been doing well. If you recall, in August, one of the large IT companies stopped the variable pay and postponed the offer letters. So I think that was the bottom. And now clearly, with this in this quarter, I think no one will have to cut their estimates in a meaningful way. And that is a clear story. Yeah.
Right. All points well made. Just playing the devil's advocate here for a bit. You would agree that this is and management themselves are saying this is a macro call, right? Now, history tells us that whenever we've had very large interest rate increases in the US in a very short time span, and we've had 500 basis points of those, there's no soft landing. Right now, consensus is soft landing, no landing, etc. Usually, you get a recession. That's the price which is paid for getting inflation under control. Suppose that plays out in 2024 in the US. Can you tell us last time we had a recession in the US, what happened to IT services revenues?
No, so, absolutely, we have a huge dependency on the US, and if there is a hard landing, there will be an impact. But let me put it this way. As outsourcing is the cheapest way of executing your large deals or software requirements. So we have seen whether it was post-Lehman crisis or whether after the tech bubble burst in 2000, every time we have seen the recovery or the impact, both the things are much lower in Indian IT services firm versus the global tech firms, because our prices are very low and our execution costs are low. So we are the last one to be cut and we are the first one to be rewarded. Let me put it this way. So if that happens also, I don't think there'll be much impact. So I will give you a very interesting data. Despite, stocks correcting since January 22 by a substantial, 20-25% in the coming quarters. But, if you see, the estimate cuts were very minuscule. So this is a very stable industry. You cannot get very high growth and you cannot see a deep cut. But having said so, if there is a hard landing in the US, obviously because of sentiments, the stocks will see correction. Fundamentals may follow, and which may not be as bad as seems to be. So I think, right now it is giving decent sign of good recovery.
Okay, fair enough. Let me bring in Prakash Diwan into the conversation as well. And, Sandeep, take your point. Hard landing, then all bets are off, right? For now, let's go with the current consensus estimate of a soft landing, right? Prakash, hi, afternoon. Welcome to the conversation. It's all about technology, right? Now, Sandeep was just telling us that FY25 expect steady state growth of 8 to 10% and, perhaps a margin expansion as well. If that is the situation that we're working with, then it boils down to, what's in the price and what's not. As Rima points out, TCS today is trading at about 27 times, Infy 1 or 2 notches lower than that. So for 8 to 10% growth, are you willing to pay more? I mean, how much headroom do you see on stocks if 8 to 10% is steady state for these companies?
Yeah, so that's a very interesting point, Surbi, given the fact that, it's the price that is showing a lot of exuberance, not the earnings itself.
Not the growth, yeah.
Yeah, so and then I would go back to a very valid point that Sandeep made, that it was a sentimental impact on the stock prices rather than the business impact, which never happened. So if you recall, beginning of last year, 23 Jan, we were all talking about a very severe impact of the recession or anticipated recession, which hasn't happened. And then we kept on expecting that to be deferred and expected to happen in the next quarter. Q3 numbers yesterday evening, what they tell us is that the worst of the quarter, the weakest of the quarter, also Q3 has not given you any negative surprises, and that's why when Rima asked for my first reaction in the afternoon, I said the numbers are absolutely okay. There's nothing to worry about, but the market is rewarding TCS and Infosys for the kind of stock performance or underperformance that we've witnessed throughout the entire year. So it's a catch-up on the price, and hence you'll probably see some PE expansion. But if you expect PEG numbers, it'll probably be available at trade between the band of 21 to 24 times. So, I'm talking about a price earnings growth number if 10% is what you could expect going forward. So from that perspective, it's still not expensive. And the market might want to see some sector rotation favorably towards some of these names. And there's lots of options available. So if you missed out on the bus on these two, you have some other names that you could ride on. So that's what the market will do. Till probably Wipro comes up with a number which is slightly disappointing or something. But this will percolate to the entire sector, should be more importantly than just these two things.
Sandeep, thank you very much for joining in with your thoughts. We'll connect with you once Wipro and HCL Tech also report their numbers. Just a quick word then on Wipro and HCL Tech. Well, Wipro will first report their numbers, expected around 4 o'clock. 4:30 is the press conference. For Wipro, it's likely to be a weak quarter. In fact, the lowest estimates are for Wipro. Dollar revenue down 2.9%, constant currency revenue down minus 2.7%. This will be within the company's guided band. They had anyway said revenues this quarter will shrink by 1.5% to 3.5%. EBIT margins too will decline due to the wage hike effective 1st of December. The key will be their Q4 guidance, which currently, according to estimates, should be -1 to +1, and plus commentary surrounding the HR issues, senior level exits, moving to competition, how the companies reacted to it. In the case of Jatin Dalal, the CFO, who moved on to Cognizant, the company had even filed a legal case against him. And there was also a Mint report about how Azim Premji was a bit unhappy with the performance at Wipro. So this, the management, I suspect, will be grilled about these issues. When it comes to HCL Tech, well, it's expected to report the highest growth amongst peers. Dollar revenue growth 3.8%, constant currency revenue growth of close to about 4%, and this will be driven by ramp up of a large deal, one acquisition, which will contribute to them. But again, despite a good showing in Q3, it's possible the company lowers its full year guidance. The street is kind of prepared for that. So according to many of the investors, analysts, the current guidance of 5 to 6% could be brought down by 50 basis points to 4.5% to 5.5%. So that's, in a nutshell, the expectation from both Wipro and HCL Tech.
Okay, all right. Well, with that, let's move on. There's a whole market out there to talk about as well. 21,930. We're very close to the highest levels of the day. Prakash, just very quickly, your thoughts on the breakout that we've seen today?
So I know the market continues to surprise all of us. Whenever you feel it's kind of seeing some sort of fatigue, there's some new energy that comes and, some event that triggers off. Today it was IT. But, remember the dark clouds continue to still be over us. In terms of oil likely to probably play spoil sport given the kind of tensions that are growing. And result season is never a smooth sailing period. I mean, you'll have some good the hits and the misses. So let the banking numbers come. I think that's where the market is going to be finding it extremely difficult to take everything in its stride, if especially if margins continue to be under pressure, given the fact that some of the largest banks are finding credit growth quite tepid, and of course cost of funds also going up. So all of that is probably going to keep markets on tenterhooks. I don't think it's going to be smooth, but the overall positivity about the Indian economy and the markets thereof is something which is driving flows. And till that continues unabated, I would be surprised if you keep discussing newer highs on the Nifty and Sensex every second, third day.
Okay, all right. Prakash, before we let you go, I wanted to ask you a view on Metropolis. There is some buzz about some negative news, but all through the session, there has been, there's been selling out there. And though the markets are at the high point of the day, you have Metropolis that's still under pressure. What's your view? Would you look to buy into this dip?
So, Nigel, interesting space to be in. And if somebody doesn't have exposure in this diagnostic space, it's definitely worth looking at. But, I keep on telling that Metropolis, for the kind of model that it has, it's had a lot of inorganic growth triggers which need time to digest and start normalizing in terms of the revenue trajectory. So it's always a bit more overpriced of sorts as compared to Dr. Lal, Path Labs, or some of the other simpler models in that. But what's happening is the competitive intensity issue is behind them. There's no more such a big headwind that would impact performance going forward. But Metropolis has a different model which it has to live with, and that's probably the reason why the vulnerability is slightly higher. Any negative news will see some people kind of wanting to book profits and exit, but you have some other options that you can definitely look at.
Prakash, thank you very much for that. The Nifty's conquered 21,900 and the Sensex 950-point gain on that. Will we make a dash towards a 1,000-point rally on the Sensex, 60 points away from that key marker? Get into a break. On the other side, we'll talk more about the markets. We'll also invite Rupen Rajguru from Julius Baer on the other side. Stay tuned.
Welcome back. Here with us on Closing Bell. Our next guest is Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer. Rupen, thank you very much for joining in. It's now turning out to be a good year for the Indian market because we've broken out of this consolidation range. You tell us, given the big run-up of 23 and these new all-time highs, what parts of the market still look investable to you, and which are the areas where you think maybe some profit-taking perhaps would be called for?
Yeah, hi. Good afternoon, Surya, and Happy New Year to you and your viewers. So yes, no, it's always a good feeling when market is at its all-time high. And on a lighter note, any growing economy, market should always be at its all-time high, right? But having said that, what has happened over the last 2-3 years, the market has corrected a lot of anomalies. So some of the sectors which were very highly valued, say at some 2-3 years back, say private sector banks, or even for that matter, consumer staples, they have corrected and now their valuations have come down to reasonable level. At the same time, the segment of the market which was extremely valuable, from various metrics, was completely ignored. That segment has really rallied in last 3 years. So be it public sector enterprise or some of the other segments like utilities, energies, which was completely ignored. So that kind of has stabilization has happened. With that perspective, at an all-time high levels, probably if you look into both the macro and the micro, clearly India is better placed. From a relative sense, the segments of the market which has value is definitely large private sector financials, because they are trading at a valuation which is much lower now than its historical average. And in every sector, there are pockets, wherein some bit of mean reversion will happen. But at a overall level, financials and as a segment, large caps and mega caps as a basket has better value than mid and small caps. So that's how we would want to position the portfolios.
All right. Hi, Rupen. Good to see you in. Nigel on this side. Missed talking to you the last couple of times, but wishing you a cracker of a year ahead in 2024. Rupen, I recall 2 themes that you all were quite bullish on. One was, I think, two-wheelers. Second was US generic pharma. Now, the issue is that you get on right, you make money. The problem is, when do you get off? Do you think both these 2 themes, they played out, or do you think they still have some room going ahead?
Yeah, after Nigel, and you have very rightly said, it's like Hotel California. We need to know also when to take profits. So here, two-wheeler, the entire thought process was that for like 4 or 5 years, the volumes of two-wheelers was quite suppressed. So a lot of pent-up demand was there. And plus, I think on an average, after 6 to 7 years, two-wheelers also requires a replacement. So a lot of the replacement demand was also there, which was not happening. So some bunching happened, and plus some bit of recovery we have seen on the rural side. So we have seen in last 2-3 months the volume pickup has been really good. But what happens, from a stock market perspective, the markets are always fast and furious, right? So there was undervaluation. Probably that undervaluation has got corrected. Now the big question is that segment now overvalued? Probably not. So because the earnings momentum will be there this quarter, the numbers would be pretty good, and for next 1 or 2 quarters, the momentum should continue. So probably it will perform. Two-wheelers, it will perform in line with the markets. I think same story goes with the US generics as well. So we had market looks at the incremental rate of change, and probably 2-3 quarters back, what we also called out that the overall pricing pressure on the US generic side is close to, if not bottom, but that incremental impact was not happening. And the stocks also, while there were some one-offs, some 1-2 blockbuster drug was there in a lot of generic companies, which led to higher growth. But at an overall segment, the earnings were good. Probably this quarter also, we believe the overall earnings growth of US generic focused companies will be upwards of 15 to 18%. But it is now getting into fair valuation zones. So to answer your question, Nigel, probably will wait for 1 more quarter and see how it pans out, and then take our call whether to take money off the table or not.
Rupen, what about on large cap IT? No bad news is good news. The market believes the worst is over. But are you convinced? Because in our last conversation, I think you had told us that the up move that we're seeing in IT is more tactical. There is no, fundamental basis, explanation, justification for the up move. And you had, in a way, recommended that maybe money could be taken off the table when it comes to IT. So how are you approaching the numbers that we've seen overnight and the rally today?
Yeah, hi, Rima. You're absolutely right. Tactically, IT, if you see incrementally, both the companies which have come out with their numbers, it's just market, like what I said about US generic, right? At some point of time, people discounted that, okay, now that fall will not happen and incrementally the thing should be positive. I think similar is what market is right now expecting. And plus, IT is actually now working out as a leverage play on the US interest rates. In fact, the previous month, the reason for rally in IT was because of the expectation of Fed pivot as well as expectation of soft landing. So everybody is right now going by that premise that there will be soft landing in the US, which I think the first quarter number of the US GDP will be out in sometime in April for us to figure out whether there is a soft landing or not. But overall, now valuations of some of these large cap companies, are 25 times on FY 25-26, and it is no longer cheap. And today's move is purely, it's just there was positionally, I think in the Infosys, probably the positioning was, there were a lot of short was there, the build-up was there, expecting bad numbers, so the numbers were not bad, and hence some bit of covering is there. So at least in the near term, probably it is definitely at a fair valuation zone. But markets are funny, you never know, right? When the market wants to make something overvalued, it does make it. But right now, we definitely don't see value in some of these names.
Oh, yes, we know. There is no greater force than the force of money. And today that force is definitely with the IT sector. Rupen, just, leave us with some thoughts on the discretionary side, because if there's one trend that remained very strong through 23, was the rise of discretionary consumption. And we saw that play out on real estate stocks, went through the roof, a stock like Titan that continues to rise even today as we speak. So, do you think there is still merit in riding some of these themes? And if yes, then what part of discretionary consumption are you, relatively comfortable with when it comes to valuations?
So, Surabhi, the overall play, what has worked in the Indian market, and that is what we are seeing in the numbers, is the not only discretionary, but on the premium side of the market. So the premium consumption has been pretty strong, right? And if you see, so Titan or some of the other jewelry companies are clearly posting very strong business updates. So that trend will continue. And I think one major force in the market, which we all are aware of, but probably we can't articulate, is this the wealth effect, which, because thanks to the buoyant capital market, which we are seeing, I think intuitively people do spend more on expensive item, taking into consideration their potential mark-to-market gains, right? And say 10 years back, the number of participants in the markets as a percentage of our overall population was pretty low. Today, as we speak, we have 14 odd crores demat account which are there. We have 16 odd crores of mutual fund portfolios which is there, and the entire, assuming majority of them would be invested into the equity market, I think that wealth effect also will come into play. So the what you call the premium consumption, so that can be linked to any company, probably, as I said, jewelry is one, tourism is one, which we are very positive. Airline industry will do well. And also within segments like, say, on apparel side or on the, say, footwear side, the companies which are focusing on higher end of the segment will do well.
All right, no points taken, Rupen. Good conversation as always. Appreciate you joining in. Have a good weekend. We'll see you back soon again here on the channel. Thanks indeed. Just want to point out that even though the market, the index is up 260, 270 points, you don't have, advanced decline is more like not quite 1:1, but not very far either. Almost similar number of stocks which are up and which are down as well. So that's interesting. And I think that would, in a way, also make sense, because almost 60% of the 250, 260 points that you have on the Nifty are coming from just 4 stocks, Infosys and TCS, and the other 2 IT stocks. There's HCL Tech and Wipro. So these are the 4 names which are contributing about 125 odd points to this Nifty rally that we are seeing. And of course, I mean, throw in ICICI and a Reliance, and that'll do another 20 or 30 points or so. We'll take a quick commercial break here. But as we do that, maybe we'll play some sound bites from the Vibrant Gujarat Summit. My colleague Yash Jain had the opportunity to talk to the management of VA Tech Vabag. That's of course listed company which is in the which is a play on the water theme, water purification theme. Listen in to some of that conversation. Take that break. We'll see you on the other side.
We will grow. We will continue to grow what we have been growing at 15-20% a year. We will continue to grow as we are getting more into international markets, especially the Middle East and Africa. Our growth rate is going to further go up, and maybe in next 2-3 years, we see very good time for Vabag and generally water sector. If you talk about standalone numbers, 14-15% EBITDA margin we consider as a good margin. And I think let's focus on that, and depending on how future orders turn out to be, of course, the aim will be to further improve on it. And even more than margin, our focus will remain on cash flow, especially free cash flow.
Welcome back. Well, the markets have slipped a little bit from the high point of the day, and it's the big boy. You pull up the Nifty chart, the intraday chart, and you'll pull up HDFC Bank. HDFC Bank has again slipped a little bit, and that's the reason why the Nifty is not holding at around 21,920 approximately. I think you should pull up the intraday chart of HDFC Bank. That's a large weight in there. And that's the one that slipped a little bit. But a good time to go to our favorite segment, D-Street Chatter. Nimesh joins us to tell us what is he picking up. Nimesh, a rather good trading session, but it appears it belongs to the large caps.
Oh, absolutely, Nigel. Again, and actually today's move has come as a bit of a surprise to a lot of people, right? It's not like, there is a large flow or a large basket buying which is leading to such a big move in the markets today. So it's largely led by the technology stocks. The IT index is of 5%, and I believe even in IT, it's part of both short covering as well as some bit of buying as well. So remember, IT as a space has been under-owned by a lot of institutions, so a bit of catch-up happening there, and plus short covering as well. So that's led to a bit 5% move in the index itself in today's trade. But don't lose a sight on, just looking at the Nifty. If you look at the composition as well, barring IT, barring some large cap names, it's not like everything is doing good. 40 stocks in F&O are actually trading in the red in a day when the Nifty is up almost 250 points. So that speaks for the kind of market which is, it's quite, quite different. One side which is IT, which is doing very good. There is profit booking as well in a lot of the other names as well. The other sector which has done well today and some bit of small buying as well is the PSU bank stocks. That's well bid by larger institutions. So that again is the flow feedback. But broadly, barring IT and some large names, it's not like the entire market is doing good and there has been a big rally kind of, so to speak. So short covering rally in IT and a bit of buying in PSU bank is a broad feedback.
All right. No, absolutely. We were pointing out to the advanced decline, which is not completely one-sided. So point taken. Nimesh, in terms of individual stocks, what's on your list?
Well, Prashant, the PSS seems to be the big theme. So today, GAIL stands out on back of very strong buy flows. I understand some large H1 investors quite active as well in GAIL. And this is despite some downgrades coming in from influential brokerages in the last few days. So GAIL, despite downgrades, has seen a bit of an uptick today, largely on back of HNI flow. So that's the first one. The second name is Chola Investment. Within the PSU names, within the NBFC names, this is one stock which is well bid. Strong buy flows is what I understand from FIR desk. So expect high volumes. And it looks like some long-only funds are quite active buying into Chola Investment today. The third stock is Anant Raj. This has come into my list a few times in the past as well. I understand the company is likely to raise funds by QIP very soon. The book might get launched in a day or two. So that's something to track in Anant Raj. And the last one is Gillette. That stock is marginally under pressure today, but the indication is maybe there's going to be a large block in Gillette very soon. So watch out for a very large trade in Gillette. And that could be at a bit of a discount. So that's a big chatter as far as Gillette is concerned.
Okay, all right, Nimesh, thanks a lot for that. Well, Mitesh joins us back again on the show. Well, Mitesh, actually we've come off 60 points, par for the course, but we are getting a little bit nervous at higher levels. You'll want the Nifty to end above this 21,850 odd mark. Mitesh, I want your view on the Nifty Bank. That's going to the 20 DMA, not able to continue, conquer that 20 DMA. And if you pull up a week-to-day chart as well, yes, the Nifty will go home with gains, but that's courtesy Reliance and IT. The Nifty Bank is still down close to around 1% for this week.
Right, Nigel. In fact, I was saying that the Nifty Bank will start participating if it can sustain about this 47,600 mark, and we just had a dip to about 47,602 few minutes back. I think important that, we capture and stay above this level. That should signal some kind of a reversal on Monday. And that about, I think, I have one buy and one sell. ICICI Pru is something which is breaking down. So STBT kind of a call can be taken there with the stop at about 534 and a target of 520 for tomorrow. And amongst the mid-cap, Coffee Day is breaking on the upside. That's a buy, trading buy with a stop at stop below 63. Target of 75 can be.
Mitesh, Polycab, one last time as we close this week out. What's the view?
So, Prashant, in the short term, I think the stock exceeded the targets. I was looking at about 4,200 in the worst case scenario after the 200 average broke. But I think the overall structure, and look at the weekly and the monthly chart, they've all been turned negative. So I think this now becomes a sell-on rally. I think eventually the stock should settle maybe closer to about 3,600, which was where the stock had done some consolidation way back in June of 23. And I think on the upside now, any rallies closer to about levels of 4,200, 4,300 will see a lot of selling happen. So I'll be a seller on any kind of pullbacks.
On bounces. Got it. Mitesh, thanks very much for that. Great speaking with you. And we'll speak again. Thanks indeed for joining us here. Well, Vikas Khemani is now joining us, founder of Carnelian Asset Management. Vikas, good afternoon. Great to have you with us here on the program. Thanks very much. Happy New Year. I think we are speaking for the first time in the new one. And it's been a great year. So I can't say so far this year, but it was a great 2023. against all odds, against all expectations. And in a similar kind of fashion, we started the cusp of another year, where again, there are all these sort of events thrown in, right? There's elections and this, what will happen to interest rates, what will happen to the US, etc., etc. In that last letter of yours, which you sort of send out to your investors, you kind of outline month by month all the events that 2023 was marked by, and it kind of put things into perspective that markets kind of moved on and looked ahead. How are things looking to you? I mean, markets near and medium term as you look into 24, Vikas?
Good to be chatting with you. I think of course, when you are coming out from a backdrop of a year like 2023, which delivered exceptionally good return, I mean, expectation from 24 should be low. Having said that, I mean, I continue to believe that 24 will be also a positive year, good year. May not be the same year as 23. Because I think every market goes through phases. But I think directionally, India looks very good. Two major factors determine the returns of the markets: earnings and liquidity. And if you look at both these factors, they are well placed. Earnings, if you see across the board, whether it is banking, automobiles, IT, where there was skepticism, I think today probably that would have gone away, capital goods, manufacturing. So, across the board, except maybe to some extent you can call it consumer, which is tapered. But otherwise, broadly, there's a broad-based earning growth which is happening. Most pessimist guy would say 15%, optimist guy would say 18%. So you have that kind of range, which is unheard. I mean, there's no other market which offers that kind of. So earning is very, very sorted. It's coming to the liquidity. If you see, I mean, liquidity is very, very strong. As we know, domestic liquidity continues to remain strong. But more importantly, I do believe 24 will see a very, very large liquidity coming from foreigners, because it is always linked to the interest rate cycle of the US. So as US interest rates were going up, we saw that money going out, and now we already know that there is a case for 2 or 3 rate cuts in 24. So as that comes down, we will see massive amount of liquidity coming into the market. So I don't see a reason why, and also probably by and large, I think the political uncertainty seems to be behind. So if that continue to remains, I see no reason why India will deliver will not deliver good returns. Now it may not be as good as 23, but definitely it will be a good year. And India is one of the best story in the world in making, and that will continue to remain. Of course, we need to be cautious on some of the frothy pockets, small and mid cap, where there is froth and excessive getting built. You need to be cautious. But I think 2024 probably will be from large caps, and then those kind of rotation might happen.
All right, because just hold on to that thought. Nimesh has told us about a potential large trade taking place on Gillette. And we have close to around 6 lakh shares that just got traded as well. So I think Gillette is one stock. Nimesh just alerted us that Street is bracing for a large trade out there. Just pull up today's chart. There's a large trade that's taken place. So just wanted to highlight that for our viewers as well. Yeah, that's the one. 2% out there. Maybe Nimesh will come back with a quick update on that front as well.
Okay, all right. That is Gillette immediately looking at that block trade that happened, and Nimesh getting it right ahead of the event. Vikas, hi, good afternoon, and good to have you on the show. So, you sound very, very optimistic, and I'm sure for good reason. The only issue is, like you mentioned, there are certain pockets of the market where maybe there's some froth building up. So just help us identify the areas that you will either avoid or trades where you think it's time to take profits. I'll give you a small example of, the sentiment that we're dealing with. Now, a lot of the smaller jewelers and some of the very recent listings, these stocks have rallied between 30–40% in a matter of a week. So perhaps, that's where you get a sense of some exuberance or maybe over-exuberance coming in. Your thoughts?
I think this is what happens in the bull market, that when a particular company in a segment does well, a lot of people, the naive investors start relating to every other company, smaller company in that, and start saying that same will get the same valuation and growth. And that is where the bubbles and the excesses get built. And as we know that when the times plays out, who was swimming naked, and those smaller players don't sustain, and you lose a lot of capital. So idea is to remain very, very sane, conscious of what value you are paying, what kind of management you are betting on. And I can tell you today, there are lots and lots of players. Still, you can find value investable places, but changing momentum, changing companies which are not so high quality is a very big source of risk. It is happening in the small and medium SME segment. It is happening in many small caps. It's happening in sectors like, where there's a lot of euphoria in sectors like defense, railways. So one has to be very careful. I mean, we have all seen that whenever there's a euphoria, whether it was a new tech in 2022, all this dies out, and when the sentiments are down, then you know what the reality is, right? So I think whatever does not meet to common sense, one should stay away. I don't think acting out of FOMO makes any sense. And that is what is happening in some of those euphoric spaces. So best to be avoided.
Okay, Vikas, just trying to extrapolate what you said. If you want valuations, you want good quality names, no use looking for the next Titan or the next HDFC Bank. Maybe some of these stocks, particularly the private sector banks, they've actually underperformed in the last 3 years. Will that be a space that you're more comfortable with?
Again, so many of these franchises will do well. There will be short-term cycles of underperformance. Outperformance will continue. I think it doesn't happen like we've been owning ICICI Bank for 4 years, and it has for us it's been 3.5 to 4x. And I see no reason why this stock will not deliver 15 to 20% return for next 5-7 years, right? But within that, there will be intermittent cycles. Last year, we saw a very big case for PSU sector banks getting re-rated. And as a result of that, we kind of created a position. And I think probably if you look at 1 to 2 year perspective, I think some of the mid-tier PSU banks could outperform some of these names which you mentioned. So I think those kind of things are there. One can have tactical play, but if I look at zoom out and take 3 to 5 year view, I think leading private sector banks like ICICI Bank will do very well, and some of the PSU sector banks also will do well.
You know, Vikas, your words that you told us on 1st of January in Trading Hour was that this is going to be a big year for IT, 2024. And it's literally started off like that. You know, it's caught everyone's imagination. The stocks are on fire. Tell us about, the thought process behind IT from here on and why you think it's going to be a big year in case someone missed that conversation.
Look, I think we have had a very contrary view on IT. I think whole of last year there was a narrative that IT is not going to do well. There's a recession in US, and I think most of our IT top throughout last year performed very well. And I think, I always said that IT is a great play on interest rates coming down in US. Please understand that every company in US and developed markets is looking to reduce cost. So far, whatever order wins most of our companies had, they were basic minimum, survival orders. The transformation, development, growth orders will come only when the environment improves, when the interest rate starts coming down. Secondly, a lot of companies won the orders, but the execution is going to start with a lag. And that is what is beginning to happen. So you saw a time when there was a lot of order winning happened, but execution didn't happen, hence growth did not come. And now you are going to see in next 3, 4, 5 quarters, growth picking up. So from both execution as well as the new order side. So according to us, IT is a great play, and not only for this year, I think it's going to remain like this. NASSCOM first, after long, upgraded their guidance for the growth. I mean, they're saying by 2030, we will have $500 billion of IT exports, which is like great, if you ask me, guidance, right? So if you look at that, there are a lot of underlying play which can drive the IT sector as well. And in this cycle, according to me, many companies will become mid to small, mid companies will become large. Like in 2009 to 14 cycle, HCL Tech, LTTS, LTI got created. Many companies will get created in this cycle.
All right. I certainly hope so. Vikas, congratulations on that call on IT. Thanks very much for joining us. And it's a pleasure having you with us here on CNBC-TV18. Speak with you soon again. Thanks indeed. That's Vikas Khemani at Kalinian Asset Management. Well, 250 points is what we have on the Nifty, 21,905 on the index. We'll take a quick commercial break here. We'll leave you with some more sound bites coming in from the Vibrant Gujarat Summit. My colleague Yash caught up with, the Home Minister of Gujarat. So some of his sort of commentary around, of course, attracting investments in Gujarat, but also the entire buzz and speculation around Tesla coming to India, Gujarat. Well, listen.
ये किसी ने खुद ने सोचा, खुद ने बोला, ऐसी कोई आधिकारिक माहिती मेरे पास नहीं है और उसमें अगर कोई ऑफिशियल माहिती होगी तो जरूर से डिपार्टमेंट की ओर से दी जाएगी। लेकिन मैं आपको एक चीज जरूर से कहूँगा कि वाइब्रेंट गुजरात मेक इन इंडिया ई व्हीकल्स के लिए बहुत ही बड़ा प्लेटफॉर्म बना है और मेरे देश के कई ऐसे इन्वेस्टर जो ईवी इलेक्ट्रॉनिक व्हीकल्स में जो काम कर रहे हैं, मैन्युफैक्चरिंग कर रहे हैं, उनके लिए मैन्युफैक्चरिंग प्लांट्स लगाने के लिए और टेक्नोलॉजी शेयरिंग के लिए वाइब्रेंट गुजरात और गुजरात एक बहुत ही लोकप्रिय डेस्टिनेशन जरूर से बन रहा है। आपने देखा होगा कि आज इलेक्ट्रॉनिक व्हीकल्स के लिए जो सेमिनार था, देश और दुनिया भर की कई ईवी व्हीकल्स की कंपनीज, मैन्युफैक्चरिंग प्लांट्स के लोग यहाँ पे हाजिर थे और उनकी बहुत डिटेल्ड मीटिंग गुजरात गवर्नमेंट से हो रही है। तो गुजरात मात्र नॉर्मल व्हीकल्स के लिए नहीं, ईवी के लिए भी आने वाले दिनों में उसकी हब बनने जा रहा है। और ख़ास तौर पे मैं आपको ये बता रहा हूँ कि ऑटोमोबाइल्स के मैन्युफैक्चरिंग प्लांट, चाहे कोई भी कंपनी हो, अगर उन्हें स्किल्ड लेबर की ज़रूरत हो, शांति, अच्छी तरह से कंपनी चले, सभी प्रकार की फैसिलिटीज़ मिले, एंसिलरी सिस्टम्स आसपास में हो, उसके लिए सही में सबसे बेस्ट लोकेशन गुजरात है। क्योंकि यहाँ पे एक तो नेशनल हाईवे की आप जो पूरी गुजरात के मैक्सिमम डिस्ट्रिक्ट से नेशनल हाईवे पास होते हैं, उसी के साथ गुजरात के मेजर डिस्ट्रिक्ट के आसपास में पोर्ट्स अवेलेबल हैं। तो उसके कारण एक्सपोर्टर्स जो है उनको लॉजिस्टिक्स के भी जो कॉस्ट है वो भी बहुत कम लगते हैं। और ये एंसिलरी सिस्टम्स जो गुजरात में डेवलप हुई है वो अपने आप में एक यूनिक है। तो मैं ये मान रहा हूँ कि ऑटोमोबाइल सेक्टर्स के मैन्युफैक्चरर्स के लिए गुजरात एक सबसे लोकप्रिय लोकेशन है। और कई और कंपनीज भी यहाँ पे मैन्युफैक्चरिंग प्लांट्स के लिए डिस्कशन में है। मुझे विश्वास है कि अच्छी सफलता प्राप्त होगी और बहुत सारी अच्छी अच्छी कंपनीज गुजरात में आएगी। और सबसे ज़्यादा अच्छी बात है कि मेरे देश के युवा जो मेहनत करके R&D करके जिन्होंने ईवी में अच्छी सफलता प्राप्त की है, उनके लिए भी गुजरात एक लोकप्रिय हब बन रहा है।
Okay, welcome back. We're basically, 86 points away from 22,000, but I don't think we'll get it done today, maybe Monday, because 2 minutes to go for market closing. We'll end with 270 points gain, 21,900 plus is what we have. I mean, how many? Almost 8 or 9 quiet sessions. Actually, not quiet sessions, but, ranged sessions. Almost a fortnight of a ranged kind of market. And then you get this break that we've had today, which basically puts us within a kissing distance of that 22,000 level. Nifty Bank will come up on your screen. By the way, we're up about 1% for the week as well. Bank Nifty also looking good with about 0.6% gain for the week. The Nifty Bank, though, still down about 0.85% or so. Guys.
Well, it's the IT index which takes top honors today. The Nifty IT index up over 5%, 5.3%. The top Nifty gainers, Infosys, 8% up on that, followed by Tech Mahindra, LTI Mindtree, HCL Tech, TCS. In fact, out of the top 7 gainers, 6 of them are the IT stocks, and the least one is Wipro, and that too is up close to about 4%. So Wipro, HCL Tech report numbers post market hours, and the stocks are going in strong ahead of these numbers.
Absolutely. And Coforge, I just might add that 6,600 on Coforge, thanks to a Morgan Stanley note, which sounds quite optimistic. Just want to talk about some of these wire guys that were short-circuited yesterday. Polycab has managed, at least a green close today, 2.5% on the upside, and KEI is ending flat as well. RR Kabil is down about 1%. But speaking about the other movers, PSU Bank's stupendous run today on a lot of these names. Look at Bank of India, 6%, Union Bank, UCO, PNB. So this was a strong part of the market for sure. And, beyond this, if you look at some names, macro